Today is the 4th of October 2010, and it's extremely rare when I come on here making certain stock market predictions. And, well, this is no different. This is just one of those extremely rare plays that I am talking about on the stock code ASTI, Ascent Solar Energies Incorporated, which is currently trading at, well, I haven't seen it lately, but it's over 358 per share right now. And this is not the first time that I have reported this particular stock. For the last time was in this little area here where it was trading at a few pennies over $6 per share. And there would be some people who would say, well, you recommend a stock at 608 before a breakout. It managed to get up to 8 and 3/4, retraced lower, made another move higher, lower than its previous high, and then it capitulated and tanked down to $2 per share. What a terrible stock pick that was. And in reality, there is, for the most part, no such thing as a bad stock pick, but how you play the stock. For when you purchase a stock, at that point, what you buy it at really means nothing. What is important is when you are able to sell and what risk-reward strategies you use within the trade. Therefore, some of the things that I talked about within the book on May the 11th, 2009 was to protect yourself within options when you play any type of a stock. Therefore, let's assume that one is to buy the stock at this point in here at $6.05 per share. And what they may do is play some options to protect themselves. Options are proposition bets that if a certain stock goes up or down to a certain level, that you can make some money depending on how accurate your call is. And by protecting yourself, you'd be making a proposition bet that if the stock goes lower, that you would cash in a X amount of dollars. Therefore, if you were to make a option bet on this level here, most likely you would have lost that bet because it took a decent amount of time before it went below $5 per share. So that would have lost. However, if you are trying to protect yourself, one of the strategies that could be used is every time it has a decent significant gain, say 50, 20%, or whatever number you desire, then you put in more option plays. Let's presume here at 7 3/4, $8, you decide I want to protect myself again. Well, the difference here is if you protect yourself at 7 3/4 and it goes down to 6.5, you would have a little bit of profits. And let's assume again in here that you purchase more options to protect yourself. Well, as the market crashes, that would have brought very good profits to the point where you could be still holding the stock today on that of a free roll, meaning that your option profits would be greater than your total risk thus far. Also, if you don't play options, then what type of technical trading are you going to do? If you ever get in a stock at this level here and you have a nice little rally, are you just going to hold it and then let the stock plummet? When people talk about buying and holding for the long term, it can be very costly to do so because you are not capitalizing on any gains, nor are you protecting yourself when any markets start to roll over. Some people would take a little bit of profits here, maybe take a little bit of profits up towards here, but more importantly, as markets break down, a trend line here, as you can see, is breaking, then in this area of 7 and change, they're saying, okay, wait a second, maybe I want to exit the trade. Basically what I'm doing is just going over different risk-reward techniques that can help one become successful, whether it be this particular stock or any other one. So now what I'm going to do is take a look at where we are today and why I think this is a good risk-reward investment. I think it's best for me to point out right now that I will not be investing in this particular stock, mainly because of whom the bookies happen to be and that of it being an American stock code. And when I say bookies, I mean brokers. There really isn't that much of a difference when you look at the words gambling and investing. They really work hand in hand together. And that's why if you are investing or aka gambling, game theory strategies will always work to your benefit when they are good game theory strategies. So why is this a good stock? Well, on the technical level, the downtrend line that was in play has been broken for quite some time. And now that it's broken, we are starting to see how this high is higher than this high. The higher low has come into play. We have a higher low from this low and this low. And well, we've already broken out of this resistance, and thus we have made a second higher high. You could also make a case that this is a left shoulder, a head, and a right shoulder for an inverted head and shoulders pattern. The numbers on the top right of the screen, these are financial numbers. There's two numbers that I like to have for ratios to make it a good stock. Number one, I want this ratio to be high. And number two is I want this ratio to be low, which is exactly the case within the stock. What the current asset to current liability ratio means is that for every $1 that they owe within the next 12 months, they have $7.82 readily available to them, which is a good number. Assets to liabilities, for every $12 in assets they have $1 in liabilities. Once again, that's very good numbers to have within a balance sheet. And the market cap to equity ratio means whenever you see one that's lower than 1 to 1, then you would be essentially be getting a stock that is of great value. Usually they come into tuition after a capitulation move or after a stock has been crushed to the downside, which is exactly what the case is. For the market cap to equity ratio down here would have been more along the lines of 0.5 to 1. As the stock goes higher, the ratio would go higher, and as the stock goes lower, then the ratio would also be going lower. And that means that you can almost say that the melt value of the stock would be roughly around $5 per share and not that of around 3.5 or 3.75. So you're getting a decent value. And if you want to look more into it, as far as what market cap and equity ratio means, ask some questions in the comment, do some research, do some Google searching. For if you're doing any type of stock investing, if you see someone saying, oh, this is a stock pick that I want, and you go ahead and just make the wager, then you're blindly going on a particular play. I've spent 9 to 10 minutes recently looking at this stock. That's it. The information that I was looking for was one, its chart analysis. You can see it in here. And then these financial numbers. That's all that I was looking for. I have no idea where the company is located. I have no idea what they do within solar energy. Nor do I really care. I will be looking at this stock like a worm. Not like a hawk, but like a worm, or whatever type of word you want to use, meaning I really do not care too much which direction that it goes. What I do care about is talking about risk-reward strategies. And I'll be doing a video series most likely. I'll try to make it a 1 to 2 episode a week series talking about investing strategy, not just within stocks and the equity markets, but all kinds of investing that I feel I have good information that I can share along the way. So as I was saying here about protecting yourself within options, game theory is very important. So what kind of strategy do you want to have? Do you want to wait for it to come back to this level of support roughly at about 315? If that's the case, if it never gets there, you'll never get the play, but that's what happens when you are using certain parameters to make a trade. If the parameters don't match up, the trade will not come into play. Do you want to put a stop loss below this line? Do you want to just buy and hold and play it like you would a Kansas City Royals versus Texas Rangers baseball game? You either win or you either lose. And as I was mentioning before, if you go up higher, maybe the stock goes to 4.5, are you going to profit take a little bit? Goes up to 6, once again, are you going to profit take a bit? Or if it goes up higher, the trend reverses, are you going to get out before major capitulation comes into play? These are the types of things you want to ask yourself before making any kind of trade, or as you're making the trades, as you adjust to the message of the market. We also talk about option puts. So say you purchase it at 358. You buy one set of option puts at this point. If it goes up to 5, 4.5, another set of option puts. How much do you put on? Well, that's for you to decide. Do some mathematical formulations. Maybe you want to do 3%, 2.5% each time. That would be your decision. This means that if you have a major fall within stocks, that you will be able to get some profit back. One of the things that I did on the May the 11th book was I talked about protecting your 401k portfolio. I will be talking briefly about that within the next video, or at least within the video series, as ways to ensure on a mathematical nominal level that a 40, 30, 50% retracement to your stock portfolio would not only stop you from losing, but potentially even profit you from any type of retracement when you are holding long positions. And all that is by putting option puts on particular stocks and particular time frames to help you along the way. Thank you for watching, and remember, once again, if you have any interest whatsoever about this stock, you are at your own risk, and I highly recommend that you do your own research, or more research than just this 12-13 minute video you have been watching. Take care, everyone.